Hello, I'm Michael Glass from michaelglass.com, where we're helping our viewers make informed decisions about their financial future. Before we begin our video, we have to talk about our disclosures. Any symbols that you see today should not be inferred as a trade recommendation. No matter what form of investing you choose, stocks, forex, futures, options, they all have a level of risk associated with them. You can lose all your money. Strategies that we show today are for informational purposes only. Future results are not guaranteed. Any investment decision you make is solely your own responsibility. Trade at your own risk. So this is our stock market technical analysis for Saturday, May 21st. In our video, we're going to look at the economic calendar. We're going to look at the prior week's price action. We're going to identify key support and resistance price levels. We're going to look at the gold and the crude chart to see if there's any leading indication there. And then we have an education spotlight at the end. So with that, let's look at the key market moving events of the past week. So over the past week, we saw all three of our major indexes fall: the Dow, the Nasdaq, and the S&P 500. The week did end lower for the week. 4 out of our 10 sectors led. We were led lower by technology. We had some renewed concerns, continued concerns really, about that concerns in Europe. We had some weak earnings from Hewlett-Packard, Home Depot, Walmart. Dell did post better than expected, which is why we had that sort of midweek rise. Barnes & Noble yesterday received a buy-in offer from Liberty Media. And LinkedIn debuted its IPO yesterday, soared 109%, which does not beat the Red Hat, which was like over 600%. You know, during that tech bubble, a lot of tech companies soared. So it's not the best ever, but it certainly was quite impressive for LinkedIn, social media site. There wasn't really any economic news. We had the FOMC minutes. Initial claims came in lower than expected, but nothing that really, crushed the market one way or the other. As for what's coming on this week, we have nothing really big on earnings. American Outfitters, Toll Brothers might say something about the housing market, but nothing that really caught my eye. As far as economic news, Michigan sentiment on Friday, GDP estimate on Thursday could move the market one way or another, but we're still a little light on market moving events. Let's go to the charts. Okay, so we're looking at the daily chart of the S&P 500, and we've been watching this uptrend, which we actually did violate a little bit to the downside. And we were watching this uptrend line. This is a downtrend line, which we sort of violate also. But I think you can kind of see this red line right here kind of going up and down is the 50 exponential moving average, and that is basically going to be our line in the sand here. We tested it here, bounced, and now we're testing it again, and maybe we're bouncing where we want. We tested it here and bounced. But you can also see that, again, we're putting lower highs, but this little pop-out candle breaks us out of this downtrend line, but we can make a new line. And we see a market that's basically stuck. Now, where is it stuck? Well, we have the swing high here from February. And then we have this swing high here from March. And we're, right now, these past 3 days, just kind of going in between those three levels. But again, I think what's most important is two things. We made this swing high that will look more obvious to you on the weekly and monthly, and then we have this 50 moving average. So we got to see which way this market wants to resolve. Are we going to get a bounce? Are we going to get a lift here? Or are we going to break through and test our 1300 price level? Our indicators are all heading down, but we're not, oversold, but they are all heading down. Let's scroll out now, as we said, and look at the weekly. And again, you can kind of see where we pulled some of those numbers from. We'll blow it up a little bit. And you can see on the weeklies that we're coming out of the overbought range and just started heading down. So the weekly is just basically saying that the selling is just beginning. That we were overbought and now we're heading down. And you can see weekly we got 2 dojis here, but we're still heading lower. I wonder if I can grab this on a weekly and pull it down, and you can kind of see when we use the weekly charts, I know it's real small, that we are sort of breaking out of the weekly chart to the downside, but the buyers came in, pulled us right back in. So this 10 moving average on a weekly is holding up, but our line in the sand on a weekly is the 20 moving average. So we have some support below us. Do we have the catalyst to move us higher? So far, no. Lastly, we'll pull out to the monthly, and again we can see what we're fighting against. We came right up to that and stopped. And this was our initial target if we were moving higher. We did not. Now we're moving down, and we can see on the monthly we have the 10 moving average. So again, there are support levels below us, but if we don't have the catalyst move us higher, then the direction is down. So my suggestion right now is sideways to down. Our indicators on the monthly, again, basically our stochastics coming out of overbought heading down, RSI heading down, MACD looking like it wants to swing over to head down. So our indicators are saying down. So we need a catalyst either to move us higher, or perhaps our indicators will be right. Let's take a look at some of our industry leaders. Okay, so we're looking at Apple. And what we can see on Apple is a couple things. Obviously, we can see the downtrend that's coming down. But what's more important is we see that we broke the 200 moving average. We came back and tested it along with the 20 and the 50 moving average. The 20 and the 50 have now crossed below the 200, and we failed. And Dave Elliott would call this ice hole failure, where we should make a new low here. So I would be looking at Apple, trading it to the downside right now. We are in a downtrend. Maybe to come down, test this 325 level if we break the 330 level. But certainly you should be trading Apple to the downside. We can see on a volume profile a lot of resistance. Volume resistance at 340. And where we are right now at 335, if we break 335, we'll probably get into this vacuum here down to 332. But there is some volume support at 332. But in the end, Apple is weak. So that's, again, when we're talking about sideways to down for the market in general, Apple is one of our leaders taking us down. Let's go to Amazon. Amazon had earnings. It has been moving up. Let's see what it's doing now. Well, still moving higher. We broke out of this range here. That's great. We came to the 50 moving average and found support, and now we're moving higher again. So some levels to watch would be this little shelf that was put in here at 196. Certainly want to watch that. And really, there was a whole box that was put in here. So it's going to be interesting to see what Amazon does between this 196 and 201 level, which way it breaks. Again, will the 50 moving average hold up as support? And what do we see on volume profile? If we get above 200, there is some resistance here, 201. So that's that vacuum that we can fill here. And then there's another vacuum up to 204. A lot of volume at the 204 price level. So there's a lot of resistance up there. Also some resistance at 201. So Amazon still strong, still an uptrend. We certainly could draw an uptrend from all the way down to the bottom. So Amazon, we've got Apple weak, Amazon strong. So we're 1-to-1 right now. What you could say is, I'll end with this. There's an ascending wedge going on here. Here's our resistance. Here's our uptrend line. It's going to have to resolve itself one way to the other. Let's go on to the next one. Let's go to Google. See what's going on with Google. Google seems to be in a channel here with the 50 moving average proving as support, but this resistance here, we talked about an ascending wedge here, and we broke that ascending wedge to the downside. Now the question is, will 520 hold up as support? And we can see that 529 volume resistance, point of control, and so again, this is also showing us more momentum to the downside. Google weak, so 2 weak, 1 strong. Goldman Sachs, financials, S&P 500, 25% financials. So go the financials, so goes S&P 500. And look at that weakness. Just basically fell off the chart here. Now there's a lot of air now between the price and the moving averages, so that needs to resolve itself, but a lot of weakness. You can see with that weakness that the volume profile is starting to pick up, so maybe there's some buyers finding value here, trying to hold it up. but clearly weakness in the financials. So that's 3 negative, 1 positive. What about Netflix? Netflix is still in an uptrend, no matter how you draw it. But Netflix seems to be in a big consolidation right now. We got a bottom right around here. But we also can draw some trend lines and draw this uptrend line here. And we can draw a downtrend line here. So again, which way is this going to resolve itself? Fail. It looks like the next move would be down from here, down to at least test this uptrend line. And we can see where we are, though, is that we're on the upside of the vacuum. So it really could go either way. So we've got 3 negative, 2 positive. Let's go to our new stock, LinkedIn, which is let's get this back. With LinkedIn, we can see, there's only a couple days of action here. So, but what we'll show you is where's the point of control, 105. Point of control at 105. We'll see if 88 will hold up as support. Price line. Price line still in an uptrend, have to say that. But we can possibly talk about a bunch of triangles forming here, or wedges, however you want to label them. There's our uptrend. Here's our downtrend. So, and we can see on our profile, there's a lot of resistance right in here. So we need to get above this 523 price level. Or you can see this vacuum that we can easily, as easily as we ran up here over these past 2 days, we can easily fall right back down. So I would certainly watch and see if we get below 520 for a potential run all the way back down to 500. So we're mixed here, huh? We got 3 positive, 3 negative as far as our industry leaders. So what is that telling us? The market could go either way. The market could definitely go either way. One of the things that I'm always asked is obviously, how can I improve myself as a trader? And, there's a very common saying in the market that says, plan your trade and trade your plan. So my answer always is, what's your trading plan? And we've talked about it before that a lot of times people look at their setup as a trading plan. It's not just about getting in the trade, but you got to know what to do when you're in the trade. How are you going to manage the trade? What is your target? What is your stop? There's a lot more to it than just getting into a trade. And then I was talking with a trader just yesterday, and he was talking about, people take this a little bit too literal. Yes, plan your trade, trade your plan, but don't forget to adjust to the current market climate. If your plan is no longer working in the current conditions, then you got to change your plan. But the true core of what this is saying is that being focused and disciplined to who you are as a trader is the key to being a successful trader. You can find us on YouTube, Facebook, and Twitter. There's our username if you're looking for us. We have some great resources for you. We've got a great free 5-part video course for you at michaelglass.com, freevideo.html. It's free 5 videos on how to develop high probability trading setups. We also have a free report, 4 of them actually, on developing a trader's mindset. Again, it's not about external factors to be a successful trader. It's all about what you develop on the inside. Our coaching services are still available. We can help you one-on-one develop that personalized trading plan, and more importantly, help you build that psychological capital to implement that plan. We still have a great relationship with 20 free trades with intraday margin as low as $300. And our charting package for stocks, great internet base, so you can use the charting package anywhere. And then, guys, it's not about the system, the indicator, or whatever room you're in. If you don't have that trader's mindset, if you don't have the psychological capital to pull the trigger, it's all for naught. And that's what we at moveupwithmike.com, michaelglass.com, are all about helping you build that will, that psychological will to implement the trade. Thanks, guys, and I'll see you next time.